Alrighty, folks. So this is going to be class 2 for the free mentorship. Class 2 is going to be focusing around the fair value gap continuation entry. The fair value gap continuation entry is one of my favorite out of everything. Personally, it gives you pretty much a higher win rate than usual, and it allows you to get a double confirmation of whether something is going to play out or not. It also increases the RR on a lot of trades. Not all the time, but for the most part, it will increase the R on majority of trades. I would say it just depends, obviously, on which session you're using it. Especially in Asia, it definitely tends to increase your R quite a bit. But in New York, it does as well. Typically speaking, it gives you about 1.5x the R. So if you were going to make 4, you make roughly 6. If you were going to make 8, you roughly make, give or take, 12, give or take, and so on. So it's quite good. I'll explain it. So CISD first, right? So same thing as we explained on video 1. CISD, that's the CISD here. You then get your sweepable, which is swing low, high, low. So now this high is a sweepable high. We sweep that high. We then have on the lower 1 minute time frame a CISD up here. So let's just say it was up here. Okay. And along with that CISD that happens there, there is a 5 minute fair value gap right here. Now, this fair value gap, you would enter on candle 1. So this will have candle 1, 2, 3. You would set a limit order here on candle 1. Stop loss goes on candle number 1. And TP goes wherever the projections for the 1 minute or standard deviation was. So let's just say that this was the example. It projects here. You would have your TP roughly right there, giving you, give or take, 5 point something, 6 point something. And then just depending on how tight candle 1 is, then your R increases by a lot. Now, why do we do candle 1? Why don't we do the open of the fair value gap, the middle of the fair value gap? Why is it candle 1 specific? Candle 1 is the last line of defense for the trade. And typically speaking, I don't know the actual reason, but typically speaking, we come back to tap candle 1 almost all the time on displays. Not every time. Sometimes you will miss, but almost all the time. Now, there's another entry after this basic entry. So this is the base entry that I wanted to explain first. Now, the next one is fair value gap. And then we look for another CISD on that fair value gap. So what would happen is on the 1 minute time frame, we would work ourselves back up. We tap into the fair value gap here, for example, and then you have a new CISD to the downside from the fair value gap play. And that would be your new entry. And you would do the same thing. You would still target the standard deviations of the OG breaker. Now, this play, admittedly, makes less money than this play for sure. The probabilities on it are not as high because, again, most of the time we go and tap candle number 1. So this play sometimes will just get stopped out and then the chart will still run. But it doesn't mean that you shouldn't be taking it. It definitely is worth the risk because the positive RR ratio on it, it's still better. And the win rate is not below 50% either. So it certainly is worth taking. So perfect. Let's wipe this out and let's go into the actual chart for some examples of what that will look like. Okay. So I did a review already over this. You can go and watch that full review. But this is a CISD here. This high, lower low, higher high. So that's a CISD. And this is a sweepable per my model here. High, low, and then a higher high, giving us the sweepable. We come and sweep that during Asia. And here we have the busy. So let's hit the replay. Okay. So we have the busy that's already here, right? After the sweep, let's go on the 1 minute and double check that there is a CISD, because remember, the whole point is CISD CISD, right? Then after the CISD, oh, where's the other text? It went away. Okay, so the whole point is CISD, right? We then have the sweepable. So sweepable. We sweep. We create the 1 minute breaker here. And then after the 1 minute breaker, we then create the 5 minute fair value gap. If we create a fair value gap without the 1 minute breaker, then the fair value gap is no longer valid. That is not a high probability play. And that fair value gap tends to usually fail quite a bit. So without the 1 minute breaker, this fair value gap on the 5 minute is irrelevant to us. Okay. So we see that price leaves, right? So you have entry number 1 being the breaker. So you should already be on this move, but let's say you weren't because you weren't on the charts. When price retaps back into the fair value gap, so starting this candle, right? As soon as we create a new breaker to the upside, then we are okay to start buying again. So where did that breaker form? Well, that breaker formed right here. High, low, higher high, lower low, higher high. Okay. Giving us a new CISD on this high once we close above it, like so. And so once we close above it here, you would set your limit order as soon as the close happens. Stop loss goes on the low of the breaker. And then the target is the standard deviation projections. Now, notice how the standard deviations from the secondary breaker is smaller than the OG. The OG is all the way up here. So you target the OG, giving you, in this case, on this reentry, 5.26R versus the original entry, giving you only 4R. Now, I'm not saying go and skip on the entry we talked about on the first video, because that's actually the bread and butter. That's the thing that will keep everything going every week, back to back, as your consistent thing. When this happens, it's a happy surprise that we see in the market, and that's it. You're not going to try to seek this as your only play. If you do, you could, and your win rate would still be high, but you are going to miss out on many, many plays throughout the week that are still good, high probability, high RR plays. So yeah, don't skip out on this. Definitely keep this as part of your protocol. Let's go into another example. All right. So this is from Tuesday, the 22nd. We have a CISD here. We have equal lows there. So an equal high. So there's nothing there. The nearest sweepable would be high, low, but there's no high. So we drag it all the way down. So this would be your nearest sweepable on this specific day, and mark it out. Now that sweepable gets swept. And then what do we have here? We have a breaker on the 5 minute, but more importantly, we have the BISI. Now let's drop to the 1 minute here for price action. After we get the sweep, do we have a breaker on the 1 minute? Yes, we do. Right here, right? So that validates this BISI as now valid per model. So now we're looking for a breaker to the upside once we retap back into the BISI. Again, ideally, we're looking for candle number 1, but it does not have to be candle number 1. So we go, we zoom in. Okay, awesome. We retapped. What's the earliest breaker? High, low, high, lower low, higher high, making this your change in state of delivery. This blue candle will be your breaker block here. And that would be your projection. So as soon as we close above it here, this very next candle would be your entry, like so. Stop goes right here. And then what do you target? You target either 4 standard deviations from the OG, which in this case, this is the OG, or you could target 4 standard deviations from the new entry, giving you 4R on the new entry, or giving you a little less than 4R, right at 3R if you did the OG. Okay. On this one, you can target either one of. Sometimes I'll go for this. Sometimes I'll go for this. It just depends if I believe that that expansion can actually go that high. I probably would have gotten out at 4 standard deviations from the OG personally on this play. So I would have gotten about a little bit under 3R on the play. All right, let's go on to the next one. Okay, so this is an example of a BC that is there, but there was no 1 minute breaker along to support it, causing extra losses. So we have the ISD here. We have sweepable here. There's a sweepable here and here. So this first sweepable, well, let's just print it out and go over it real quick, actually. So that's bullet number 1. This will be bullet number 2. Let's go on to the 1 minute and break it down. So bullet number 1 would be here on the first sweep that had happened, which it goes from here to here. That's a valid breaker, and it did deliver. So business on that one is done. This is bullet number 2, but because bullet number 1 delivered, this bullet still counts as bullet number 1 because there was nothing wrong with the first trade. The first trade actually won, and it delivered all the way. So this is a fresh quote unquote sweep. Okay. Now here we don't see a 1 minute breaker all the way to up here. Okay. There is literally no way to make this a breaker. Not even this is a breaker here because the swing low and the swing high don't have a blue candle between them. So there's literally no breaker block here. So the CISD is not possible till all the way up here. Okay. Now on the 5 minute, after the sweep, we do get a BC. Okay, so let's drag that out real quick. Now, that BC, typically speaking, once we retap into it, we're looking for a breaker up to then be able to play price action. Where is the nearest breaker? Well, nearest breaker is right here. Now, why is this a breaker? Let's go through it real quick and I'll explain it. So you have the swing low we're coming from, right? You have a high, low, higher high, lower low, high, low, higher high. Okay. So this motion where high, low, higher high, lower low is not a breaker to the downside. Why? Because there is no red candle between this or this. But once he turns around and he closes above here, it is a breaker to the upside. It is a CISD to the upside. Why? Because between this candle here and this candle here, so this pivot point to that pivot point, there is a blue candle, making this your breaker block. Little funky, but that's the way it works. So that's your first CISD, meaning you, unfortunately, would have taken stop out on bullet 1. So once that gets swept, you have to look for bullet 2. Well, where's bullet 2? Bullet 2 is here. Okay. There's no breaker on this portion. So this is bullet 2. Bullet 2 closes above here. That's your entry. And bullet 2, sadly for you, gets stopped out. Then you have bullet 3, I guess, if you're going to take 3 bullets, which again, I only do 2 bullets on the model. But let's say you did bullet 3. Well, unfortunately for you, you got stopped out 3 times already. Then there goes the 4th one. Here is when you finally, so 1, 2, 3. 4th trade is the one you're taking now here. And finally, the 4th trade doesn't get stopped out and he runs. So it costs you 1, 2, 3, 4 bullets to get the idea up and running. And he finally goes and wins. And it does deliver 4 standard deviations, if I'm not mistaken. Yeah, it does. But it costs you 3 bullets to be able to do it. And so this trade barely pays off for the 3 losses you just acquire, giving you only 1 net positive R on the play. Instead of doing that, you could just wait for, again, the 1 minute to confirm, or for this low to fail and give you a new breaker to the upside, as this was still bullet, quote unquote, number 1. Okay. I know this one is a little bit more packed, but yeah. All right, let's go on to the next one. All right. So this is April 10th of this month. So we have the CISD to the downside. We then have low, high, low, giving us our sweepable. We swept it here. We then sweep one more time here. We'll mark both of those and we'll zoom in a second. And then after the second sweep, we get a CB. Let's drag that CB out. And this is a perfect example of candle 1 getting hit. Candle 1 is right here, of course. So you could just blindly Again, if there's a 1 minute breaker, so we'll zoom in a second. But you could just blindly set your order at candle 1, and then your target would be 4 standard deviations of the original 1 minute breaker. Or you could at this point reach for something a little bit higher, like 2 standard deviations of the 5 minute breaker, because this do tend to run for longer than the regular plays. So is there a 1 minute breaker on the first sweep that happened here? Yes, there is. So you took a stop out. So it's 1L right here. Runs again. And is there a breaker along with the CB on the 5 minute? Yes, there is. So this is the projection. So this is a perfect example where taking this entry reduces your risk, or it increases your RR, because if you risk the same amount of money, then now you're just making that much more in this trade. So the OG trade would make 4R if you target 4 standard deviations, like so. But the new entry from candle number 1, so whether you get trigger here or here, now ends up making 6.89R on the trade. So it's significantly better than if you were to do the candle number 1. Again, if you do the fib from the 5 minute, the 5 minute would have been relatively close. So you would have been able to target the 5 minute, giving you just a little over 7R, but I wouldn't get caught up on the detail because it's so similar that it wouldn't have matter. But this is a perfect example of candle number 1. Now let's go in one more time here and let's talk about price action in this portion. So let's say you were trying to do an entry from the CB. So instead of waiting for it to retap over here, right, and go to candle number 1, you were trying to do a retap into the CB into a sell for a new breaker. Well, there's no breaker here, so you would have saved yourself from that. So there's no problem. But unfortunately for you, there is a breaker here. And this breaker would have been valid per quote unquote the model if you're doing the fair value gap entry without tapping into candle number 1, meaning you would have taken a stop out here because you didn't want to take the OG breaker or be patient to wait for candle number 1. So in this case, that would have been your loss. Then you get a second breaker here, and this breaker is obviously bigger than if you just take the OG breaker. Okay. And it did this come to candle number 1. But let's say you take it like this. Well, unfortunately for you, that's another stop out once again. And so my point here is, for the most part, you want to be taking either the OG breaker or you want to be taking candle number 1 for the most part. Not every time, but for the most part. You want to stick to that as close as possible, because you will have some instances where this would happen, where you try to get it on early and it ends up biting you in the butt. So my recommendation is, if the CB play or the BC play, the fair value gap play, comes back in but doesn't quite tap candle 1, and you have your OG, and you can get a discount entry on your OG like so. So instead of being like this, 344 ticks, now it's only 257 ticks. That gave you about a 30% discount on your original entry. So if you trigger it like so, you would be making now 5.67R versus 4R before. So if you want to play something, I would do this rather than doing this, where it comes, it retaps, makes a new one, and then that can get swept. This is a little bit situational because it depends also if the original breaker is in a location that protects the CB or BC play and doesn't overlap. With the other two trades we spoke about, the fair value gap entry was below the actual breaker that protects everything. So on those, if it forms a breaker out of those, it typically indicates that it's going to be more speedy and it's going to have less resistance. So it can just go from the fly onto wherever it's going to go to, rather than having to pull all the way back. But it's not always the case. So yeah, that's my advice. My advice is stick to the OG entry or candle number 1 for the most part. Try to reduce the entries on this as much as possible, as you will incur some extra losses that are not needed. So that's pretty much it for today's class. Go and back test it, take screenshots, put them somewhere, and do some demo trading on it so you can get the idea on how this looks like on the live markets. And yeah, if you have any feedback, please comment, like, subscribe. Let me know what I could do better. Let me know if you're confused about something. Next week, we'll be doing some classes on specific rules on how to stay out of trades, and how to grade my trade. So how do I know which one is higher probability? How do I know which one is lower probability? Which ones am I willing to take, even though I know they're lower probability? And which ones am I willing to avoid, even though they may seem like higher probability at a glance?